and we are looking at some amount of short covering which is also coming in. Abhishek Basu Malik is here with us to talk more about a lot of things, markets, results, all of that. Abhishek, let me start our conversation with a tweet which I just put out for my market friends and all of you who are our circle on the Twitter. Would you agree that the worst of margin pressure for raw material costs, wage hikes, all of that, the peak of margin pressure would be seen in this quarter and the next quarter? Do you agree to it? Is it likelihood, or do you think that margin pressures could sustain beyond 2-3 quarters?
So first of all, thanks Ajay for having me on your show, and I completely agree with you. In fact, I would probably say that this quarter would probably see the largest margin pressure. Going forward, it's going to decrease. I mean, inflation and all of the things that people are worried about are probably going to get better in the near after a few months.
So sequentially, you expect margin pressures to normalize from here on, right? And this was also the third quarter in a row where margin pressures, or I would say the earning estimates, were scaled down by the street and the analyst community. So do you think that downgrade cycle also ebbing out?
Possibly. I mean, a lot of earnings downgrade, especially because it was happening because of raw material prices that were going up. It is a large number of raw material prices are continuing to go up, but I think what is going to increasingly happen is with the higher base effect, the growth rate will come down, and one, that is going to happen, and second, probably we will see a flattening out of whatever price rises that was there, and hopefully things will get better from here on.
Abhishek, you understand the IT space very well. I mean, today I was talking to a large IT company, and they were saying that the wage hikes this year, wage inflation 9 to 11% range, was way higher compared to 7 to 9% last year. And even in the US, 1 or 2% wage inflation has turned to 4 to 5% wage inflation. Do you think this wage inflation too, and because of which there is huge attrition, Cognizant 44%, Infosys 27%, that also is peaking out now?
Two things. One is that attrition numbers that companies report typically tend to be slightly lower than what it actually is, because the denominator keeps changing. That's one. Second is that wage hikes have always been there. There are times, wage hikes go through cycles. So there are times when there'll be higher hikes, there'll be times when there'll be no hikes or lesser hikes. I don't think it materially changes the attractiveness of the business or otherwise. What typically tends to happen is that you would have also seen that Indian companies, IT service companies, have started taking pressures in very, very large volumes. So they typically tend to focus on the pyramid, right? So a lot more of people at the lower end, and if you look at the starting salaries, they have not really changed meaningfully over the last maybe 10-15 years.
Okay, let's talk about auto space. Last 3-4 days we saw significant up move in the auto space, and not only that, even the auto ancillaries have started moving very well. This was a very under-owned space and marred with a host of issues, be it supply issues. Demand continues to remain strong. Do you see a case building for cherry picking in auto and auto ancillary? And do you have any particular one in your portfolio?
Very, very definitely. And I think auto ancillaries, especially also the two-wheeler space, I think they are going to do significantly better than what people are expecting. Again, like you said, very, very under-owned sector. People don't like it. A lot of problems with chip shortages and things like that. Those problems might not get sorted out immediately, but if you have a slightly longer term view, maybe a year, 2 years, I think autos are in a good place where we can start looking at and start accumulating in that space, autos and auto ancillaries.
Right. Abhishek, there is a concern in the market that because of high inflation and slowdown, there could be a significant demand destruction in many categories. In fact, if you look at the home mortgage data of last month in the US, because of steep rise in home loan rates, there was a 10% fall. People fear that same kind of demand destruction in several categories could happen in India too, and hence are booking profit out of a lot of categories, thinking that valuation will fall. Do you agree? Could that be significant enough to be a sign of worry?
Yeah, so your question has many nuances. So let me try to take one by one. So first of all, if you look at, say, the real estate or that, the mortgage or typically the real estate space, I think there was a company presentation today which said that aggregate prices have gone up by 13.9 or 14% of construction. Now, obviously, that will get passed on to the buyers. In addition to that, what we are seeing is, slowly interest rates are going to inch up. Now, the point is that when and who are you selling to, and when will that customer come and say that, no, now it is, you are pricing me out of the market. Now, in my opinion, people who are buying houses, and maybe I have a contrarian opinion here, is that in India, the affordable housing segment has not really worked. It is the more expensive segment, the premium segment, which has been performing well. And that will continue to perform well because that 10-15% of price rise is not going to change the opinion of a person who wants to buy a flat or a house. Now, if you look at other consumption articles, it will depend on what you are spending on. Marriages are lined up after practically 2 years where people had to sort of postpone marriages and other functions. So people are spending on those kinds of events. So again, travel, people are spending. So you have to look individual space by space and figure out what exactly is happening in each of those areas.
Right. So Abhishek, in the last few weeks and quarters, where have you been nibbling? Any areas, even companies?
I think right now, if I look at the change in the market regime has been that we have moved from a quality growth kind of a market to more of a value market, right? So if you look at what is happening, stocks which were considered value, so cyclicals, those are the spaces to be in my opinion, for the next year and a half. So engineering, capital goods, autos, cement, these are the places that look very interesting. Power, these are the places which really look interesting right now.
And small caps and mid caps, are you researching that area?
Yeah, I am completely market cap agnostic, and I don't think if you remove the absolute top tier of companies in India, the rest, if you go down a little bit in the mid cap area, there are a lot of opportunities even today that we can look at across the spaces that I just mentioned.
Right. All right, Abhishek, great chatting. Thanks for your time. I look forward to having you back on the show soon. That was Abhishek Basu Malik. He's a very intelligent money manager working out of Calcutta, away from the noise, looks at stock picking is his core forte, and he was discussing his thoughts on the market. Let's take a short break on that note. On the other side of the break, we'll get you a view on a pharma company. We'll analyze the commentary from HUL and many more other stuff.